Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this tutorial, I will be focusing on the crypto market cycle, specifically with a focus on the Bitcoin market cycle, because that is what drives the entire crypto market, since it is correlated with Bitcoin. And this is a very well-timed tutorial because we're about to have the next halving in just a couple of months, and that only happens every 4 years. So this is a very well-timed tutorial. Make sure you don't skip it. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. First of all, let's define what a halving is. Now, a halving, put very simply, is a decrease, or better said, a cutting in half of the reward that gets given to miners to essentially secure the network and do everything that they do. Now, why is that important, and why the concept is important? Because this essentially means that the supply gets cut in half. The supply that it's emitted into circulation on a regular basis gets cut in half. And that only happens every 4 years. And that creates a supply shock, because essentially those Bitcoins that get given to miners most of the times actually get then sold into the open market, or even if they don't anyway, is a strong decrease, a cutting in half of the supply that gets emitted into circulation. And when we will now go and see what that looks like if we check the on-chain data, you will see that those are quite sharp moves that you get when you see the halving coming into play. So when you see that new supply that gets emitted into circulation that gets absolutely cut in half. So quite important events. Now, why is a decrease of supply, a cutting in half of supply, very important for a market? Because a market is always looking for a balance between the demand and the supply. That is what essentially gets priced, right? The equilibrium between supply and demand. That is one of the most basic concepts of every market. And here I have marked for you already the previous halvings. We can see that we have the third halving here, the second halving here, and the first halving here. Now, if we go and zoom in, for example, starting from the first halving and see what happened, so how did the market react to such event, we can see that those are quite drastic moves that the market created just a few months after the halving. In fact, we can see the first halving here in 2012. The market immediately started pumping to the upside, and then we had a full-blown bull market that got created after the first halving. Then the second halving was here in 2016, as you can see, 4 years after. Now, is it exactly 4 years? No, it is not exactly 4 years. It's more or less 4 years, because reward drops, so essentially halvings in other words, are every 840,000 blocks, okay? That takes more or less 4 years. And what you can see here is that, in fact, approximately 4 years after, you had another halving. And as you can see, the market reacted quite aggressively. We had a huge bull market that came after that. Then we had the third halving in 2020. And as you can see, we had another huge bull market. And we are about to have another fourth halving in around April this year. At the moment, if you go here, there are many Bitcoin halving countdowns, essentially websites. This one is one of my favorites. And you can see that on the 14th of April 2024, that is the estimate, at least at the moment, because that continues to change depending on essentially how quickly blocks are getting solved. We can see that at the moment we are at 829,000. We have to get to 840,000. And that is approximately in 64 days, 2 hours, 45 minutes from the recording of this video. Now, obviously, this will change depending on how quickly the blocks are getting solved. So is approaching, right? We are finally about to get another halving. And what will happen when we get the other halving? Now, what we have seen here is that every time we got this massive move to the upside, but that is not directly just because we got the halving. It's not like we get the halving and the market immediately explodes. There is an underlying reason for that, which is, in fact, that drastic decrease of the supply. And I want to show you that massive decrease of supply using the on-chain data. Now, as you know, once you have a blockchain, essentially most things can be tracked. And if we go here onto one of my favorite tools to analyzing on-chain data, what we can see here is that if we're looking at the new supply, right, to the new supply emitted into circulation, and this line here is the price, okay? So this white line is the price, this purple line is the new supply. So what I was speaking about earlier, right, the new supply that gets emitted into circulation. Now, what we can see here is that more or less the new supply was stable, right? New supply getting emitted into the market was stable. Then in 2012, we had this massive drop. Now, this massive drop is exactly this one. Okay, this halving here is that massive drop in the new supply emitted into the market. And what we can see afterwards, as you can see here from the price, we had a massive move to the upside. Then we had the new supply emitted into circulation, more or less remaining the same. Then we had the second halving, and you can see here this massive drop to the downside once again. And we can see that that was perfectly here on the second halving in 2016. You can see here 2016, second halving, massive drop in the new supply emitted into the market and massive drive up of the price, right? We had a massive move to the upside of the price, but that is because the supply was cut in half. Okay. Now, not only the supply gets cut in half, but because most people know that the supply is getting cut in half, you also have another effect that most of the times even get an increase of demand. And an increase of demand combined with a decrease and cutting in half of new supply, that essentially creates a supply shock, which is what drives the market cycle of the crypto market and of the Bitcoin in specifically. What we can see here is that in 2020, we had yet another drop in the new supply. You can see it exactly here. Shortly after, the market had another push to the upside, which is exactly this one here, right? This is the event that you see here, and the new supply this is all real, right? This is tracked live. This is the new supply gets cut in half with halving. So it's a very real thing. And once it gets cut in half, the price created a massive move to the upside, because again, there is a disequilibrium between the supply and the demand, right? Now, what we can see here is that in about 64 days, that is about to happen once again. And here is where very soon we will see another move to the downside like this, right? Of the new supply once again dropping. Now, this will continue over and over again. However, in time, I believe that these cycles and the halvings in general will start having less of an impact as the halvings keep happening over and over again. Now, why I believe that? Because every single time you're getting a cutting in half. So let's say starting from 50, you go from 50 Bitcoins given to miners, then we go to 25, then from 25, you essentially go to half, right? Then you go to 6, then you go to less than 6, so to 3, because essentially more or less, now I'm rounding everything up, but more or less it's getting cut in half every single time. So it will continue to get lower and lower and lower. The supply shock will continue to get lower and lower and lower. But the halving that we're about to have, in my opinion, we're about to get another quite important supply shock. Now, I want to combine what we have learned now from the fundamental aspect, because this is the fundamental aspect of the crypto market cycles, to then the technical aspect of the crypto market cycle. Now, if you remember, when the market was at this area here, right, exactly here, around this zone, this is where I said from here, I expect the market to start pushing higher. Then after the next halving, then is when I expect new all-time highs, right? That was my opinion on the crypto market, and that has not changed. I believe that this will remain the low, and I believe that, in my opinion, we will see new all-time highs after the halving. However, it is also important to keep in mind that the reason for which when the market was at this level, and I did not see this, and in fact, you will find that previous analysis in the link in description of this video in which I explain all the reasons for which from here I expected more bullish continuation, that is essentially because this was also the previous cycle high. In fact, from here, what we had is exactly the zone in which the market reversed from the previous bull market that came after the previous halving, and the market entered into the bull market. And here we had another halving, the market created a move to the upside. Then again, we had the bear market, which went all the way down to test exactly the previous cycle high. And when the market tests a previous cycle high, that is when you usually expect more bullish continuation to happen, and essentially for the market to bottom and for another entire cycle to start once again. And this was not the first time that the market created something like this. In fact, if we go here in the past, what we can see? We can see that also when the market was around this area, we had a very similar move, right? Here is where the market went and tested exactly a previous, in this case, mid-cycle high. The market went and tested it here and respected this level. So most of the times the bottoms of a cycle, so when you have the bear market, most of the times the bear market will bottom at a quite important structure level of the past, right? Now in this case, it was this high. In this case here, with the most recent price action, it was exactly this level here, because this was the most important structured zone. If you look left, when the market was pushing lower, this was the only important structured zone. So from a structure perspective, it made only sense that the market would stop exactly at that structure level, and from here start the push higher. So these are the fundamentals essentially of the crypto market cycles, specifically the Bitcoin market cycles. I do not believe that this will continue to have such a big impact, but at least for the next 8 years, so for this halving and the next one, I still believe that it will have a massive impact, and it will create a lot of supply shock, because I believe that still the next two drops in the new supply that gets emitted into the market, so the next two drops that you see here in the purple line, I still believe that it will be quite significant, and they will create a shock into the equilibrium of the market between the supply and demand. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.